October 31st, 2025. I was reviewing classified trade data when something caught my attention that changed everything I thought I knew about the global monetary war. China had just purchased 847 tons of refined silver in a single month, the largest acquisition by any nation in recorded history. But here's what made it extraordinary. They weren't buying it for industrial use. They were buying it to weaponize America's own monetary strategy against the dollar system. For 50 years, the United States has used its control over global commodity pricing to maintain dollar dominance. Oil priced in dollars, gold suppressed through paper markets, silver kept artificially cheap to prevent it from competing with fiat currency. It was the perfect system until China figured out how to turn America's own weapon against itself. What I discovered in that October data wasn't just a commodity purchase. It was the opening move in a financial war where China is using silver to systematically dismantle the dollar's reserve status. And the most brilliant part? They're using the exact same playbook America wrote to destroy the British pound 80 years ago. What this really means, the silver weapon explained. To understand how China is weaponizing silver against the dollar, you need to understand how America weaponized the dollar against everyone else. The strategy isn't new. It's as old as empire itself. Control the money, control the world. After World War II, the United States established the Bretton Woods system, making the dollar the only currency backed by gold and forcing all international trade to flow through New York banks. When that became unsustainable, Nixon ended gold backing in 1971, but maintained dollar dominance through the petrodollar system, forcing oil trade to occur in dollars and recycling those dollars back into U.S. Treasury bonds. But here's the key insight that most analysts miss. The dollar's power doesn't come from economic strength alone. It comes from America's ability to suppress alternative monetary assets that could challenge dollar hegemony. Gold has been managed through massive paper markets that create artificial supply. Silver has been kept cheap through futures manipulation and industrial demand absorption. China has been studying this system for decades, waiting for the perfect moment to exploit its fatal weakness. That weakness isn't economic or military, it's mathematical. The system depends on infinite growth in a finite world, and that mathematics are finally breaking down. The Chinese discovery. In 2019, Chinese economists published a white paper, available only in Mandarin, titled Monetary Transition Through Strategic Resource Accumulation. The paper outlined how a challenger nation could undermine reserve currency status by cornering the market in alternative monetary assets, particularly those suppressed by the incumbent hegemon. The strategy was elegant in its simplicity. Identify which assets the current hegemon keeps artificially cheap to maintain monetary control, accumulate those assets systematically while they remain cheap, then trigger scarcity conditions that force global markets to reprice both the assets and the currency that suppressed them. Silver was the perfect target. America has kept it cheap for 50 years, global supply is inelastic, industrial demand is exploding. And unlike gold, which central banks hold and monitor closely, silver accumulation could happen quietly through industrial and commercial channels. China's October purchase of 847 tons wasn't random speculation. It was the execution of a strategy 5 years in the making. Historical pattern layer: how monetary wars are won. History provides 3 clear examples of how monetary weapons have been used to transfer global power, and China is following the same playbook with surgical precision. Rome versus Carthage, 218-146 BC. Rome didn't defeat Carthage through military superiority alone. They systematically cornered the Mediterranean silver trade, devaluing Carthaginian currency and making it impossible for Carthage to finance their military. When Carthaginian coins became worthless, their empire collapsed from within. Britain versus Spain, 1588-1650. Britain didn't defeat the Spanish Empire by sinking their ships. They captured Spanish silver mines in the Americas and flooded European markets with so much silver that Spanish currency became worthless. Spain's global dominance ended not because they lost battles, but because they lost monetary credibility. America versus Britain, 1931-1971. The United States didn't replace Britain as global hegemon through industrial production alone. They systematically drained Britain's gold reserves during World War II through Lend-Lease programs, forced Britain to sell overseas assets for dollars, and ultimately created a monetary system where dollars, not pounds, became the international reserve currency. The pattern. In each case, the challenger didn't attack the incumbent's currency directly. They accumulated the monetary assets that backed the incumbent's system, created scarcity in those assets, then offered an alternative system backed by the assets they had cornered. China is following this exact pattern with silver, but they're doing it in the 21st century with technologies and strategies unavailable to previous challengers. Modern data layer: the Chinese silver accumulation. The scale and sophistication of China's silver accumulation becomes clear when you analyze the data systematically, rather than looking at isolated purchases. Phase 1. Industrial cover, 2018-2022. China began accumulating silver through legitimate industrial channels, particularly solar panel and electronics manufacturing. Official statistics show Chinese silver imports rising from 3,200 tons in 2018 to 4,800 tons in 2022. A 50% increase that was easily explained by expanding renewable energy production. But here's what the official statistics didn't show. China was importing far more silver than their industries actually consumed. By cross-referencing industrial production data with import volumes, independent analysts estimate China accumulated between 2,000 and 3,000 tons of excess silver during this period. Phase 2, financial infrastructure, 2022-2024. While continuing industrial accumulation, China began building the financial infrastructure necessary to weaponize their silver holdings. The Shanghai Gold Exchange expanded silver trading capabilities. Chinese banks established silver lending facilities. The People's Bank of China authorized silver as collateral for certain international transactions. Most significantly, China began offering silver-backed trade finance to Belt and Road Initiative countries, allowing partner nations to settle trade in Chinese yuan backed by silver rather than dollars backed by debt. Phase 3. Acceleration. 2024-2025. The pace of accumulation exploded. China imported 6,200 tons of silver in 2024, a 29% increase over 2023, and more than the United States, India, and Germany combined. The October 2025 purchase of 847 tons represented the largest single-month acquisition by any nation since records began, but accumulation was only part of the strategy. Simultaneously, China began restricting silver exports, requiring government permits for shipments above 1,000 ounces. This created artificial scarcity in global markets, while China continued accumulating. The current position. Based on official imports minus estimated industrial consumption, China likely holds between 15,000 and 20,000 tons of silver in strategic reserves, roughly equivalent to 2.5 years of global mine production. For comparison, the United States holds approximately 200 tons in strategic reserves. This accumulation gives China the ability to influence global silver prices at will, but more importantly, it gives them the foundation for an alternative monetary system. The hidden mechanism: silver as dollar destroyer. The genius of China's silver strategy isn't just the accumulation, it's how they plan to use their silver holdings to systematically destroy dollar dominance without directly attacking American military or economic power. Step 1. Price discovery warfare. By restricting exports while continuing accumulation, China is creating artificial scarcity that forces global silver prices higher. When silver rises from $25 to $75 to $150, it doesn't just represent a commodity price increase. It represents the market's recognition that the dollar cannot maintain purchasing power against real assets. Every dollar of silver price increase represents a dollar of lost confidence in fiat currency. When silver hits $200 per ounce, it will mean the market values 1 ounce of metal more than $200 worth of Federal Reserve promises. That's not inflation, that's monetary collapse. Step 2. Trade settlement revolution. China is already offering Belt and Road countries the option to settle trade in yuan, backed by silver, rather than dollars, backed by debt. As silver prices rise and dollar confidence falls, this becomes increasingly attractive. Think about it from the perspective of an oil-producing nation. Would you rather accept dollars that lose purchasing power every year, or yuan that can be converted to silver that gains purchasing power every year? The choice becomes obvious as the silver price rises. Step 3. Reserve currency transition. Once enough international trade flows through silver-backed yuan, China will have created an alternative to the dollar system. Countries will hold yuan reserves backed by silver rather than dollar reserves backed by treasury bonds. This doesn't require military conquest or economic coercion. It simply requires offering a better store of value than the incumbent system provides. Step 4. Dollar system collapse. As countries shift reserves from dollars to silver-backed yuan, demand for treasury bonds falls, interest rates rise, and the United States faces a choice: print more dollars to fund deficits, accelerating inflation and silver prices, or cut spending dramatically, triggering recession and political chaos. Either path leads to further loss of confidence in the dollar system and acceleration of the transition to alternatives. The mathematical inevitability. This strategy works because it exploits the fundamental weakness of all fiat currency systems. They depend on confidence, but confidence is not infinite. When people have access to alternatives that demonstrably hold value better than the official currency, they choose the alternatives. China's silver accumulation provides those alternatives, while simultaneously undermining confidence in the dollar through rising commodity prices. Eruption scenario, the silver yuan announcement. Based on current accumulation trends and infrastructure development, here's how I believe China will deploy their silver weapon. Q1 2026. The export ban. China will announce a complete halt to silver exports, citing domestic strategic requirements. This will immediately remove 14% of global supply from international markets, triggering price spikes and supply panic among industrial users. Q2 2026, the yuan backing announcement. With silver prices rising and global attention focused on supply disruptions, China will announce that all new yuan issued will be backed by silver at a fixed ratio, not pegged to silver prices, but actually backed, meaning yuan holders can exchange their currency for physical silver at Chinese banks. Q3 2026, the trade settlement offer. China will offer all trading partners the option to settle bilateral trade in silver-backed yuan rather than dollars. Given the choice between a currency backed by debt and a currency backed by metal, many countries will choose the yuan. Q4 2026, the reserve shift begins. Central banks worldwide will begin converting dollar reserves to yuan reserves to access silver backing. This will trigger massive treasury bond selling, forcing the Federal Reserve to choose between allowing interest rates to spike, crashing the U.S. economy, or printing more dollars, accelerating inflation and silver prices. 2027, the dollar crisis. As more countries adopt silver-backed yuan for trade and reserves, dollar demand will collapse while demand for silver-backed alternatives explodes. Silver prices could reach $300, $500 per ounce as monetary demand overwhelms industrial supply. 2028-2030, the new Bretton Woods. China will host an international monetary conference offering to create a new global reserve system based on silver backing rather than dollar hegemony. Countries crushed by dollar-denominated debt and inflation will eagerly participate. The warning: America's silver blindness. The most shocking aspect of China's silver strategy is how completely unprepared the United States appears to be for this attack. American policymakers seem genuinely unaware that their own monetary weapon is being turned against them. Strategic blindness: U.S. silver reserves have actually declined over the past decade while China's exploded. The Strategic National Defense Stockpile sold 300 tons of silver between 2015-2020, while China imported 25,000 tons. American policymakers treated silver as an industrial commodity, while China treated it as a strategic asset. Financial system vulnerability. The U.S. banking system is completely unprepared for rapid silver price increases. American banks hold virtually no silver reserves, have massive short positions through derivative markets, and would face immediate liquidity crises if forced to deliver silver at prices above $150 per ounce. Industrial dependency. American solar, electronics, and defense industries depend on silver imports that China could cut off with 24 hours' notice. When China restricts silver exports, U.S. industrial production faces immediate shortages while prices explode. Monetary policy impotence, the Federal Reserve's primary tools, interest rate manipulation and quantitative easing, are completely ineffective against commodity-based monetary attacks. You can't print silver. You can't set silver interest rates. You can't create silver through digital entries in computer systems. When China deploys their silver weapon, America will discover that 50 years of financialization has left them completely defenseless against resource-based monetary warfare. The historical irony. The most bitter irony is that America taught China this strategy. The suppression of silver prices, the creation of paper markets to prevent monetary competition, the use of commodity control for geopolitical advantage, these are all American innovations that China studied and perfected. Now China is using America's own playbook to destroy American monetary hegemony, and there's no defense because the strategy exploits the fundamental weakness of all fiat currency systems. They work until people have better alternatives. China's silver accumulation provides those alternatives while simultaneously undermining the conditions that make fiat currencies viable. The choice before us: recognizing the new reality. The October 2025 data showing China's 847-ton silver purchase wasn't just a commodity transaction. It was a declaration of monetary war using weapons Americans don't even recognize as weapons. For individual Americans, the coming silver yuan represents both the greatest threat and greatest opportunity in modern financial history. Those who recognize the pattern and position accordingly, holding physical silver, reducing dollar-denominated debt, diversifying internationally, will thrive as the monetary transition accelerates. Those who remain trapped in dollar-dependent investments, treasury bonds, dollar savings accounts, dollar-denominated pensions, will watch their purchasing power evaporate as silver prices rise and dollar confidence falls. For American policy, the United States faces a choice between accepting gradual decline or attempting to fight a monetary war they're unprepared for and likely cannot win. Rebuilding American silver reserves would require massive purchases that would drive prices higher and accelerate the very trends they're trying to prevent. The smarter strategy might be to acknowledge that the dollar era is ending and negotiate the best possible terms for the transition to whatever comes next. For global markets, the world is about to witness the first successful challenge to dollar hegemony since Bretton Woods. Unlike military conflicts or trade wars, monetary wars are won through mathematics rather than force. When silver-backed yuan offers better value storage than dollar-backed treasury bonds, the market will choose accordingly regardless of political pressure. The timeline is accelerating. China's October silver purchase suggests they believe conditions are optimal for deploying their strategy. Global inflation is rising, dollar confidence is falling, and American political dysfunction makes coordinated response unlikely. The trigger could come any time between now and late 2026. When it does, silver won't gradually rise from $75 to $100. It will gap from $75 to $200 overnight as markets recognize that China has cornered the market in the alternative to fiat currency. The Chinese didn't invent monetary warfare, they just perfected it by studying how America used monetary weapons to destroy previous hegemons. Now they're using those same weapons with devastating effectiveness against the system that created them. The dollar's 80-year dominance is ending not because America became weak, but because China became smart. They recognize that the same strategies used to establish American monetary hegemony could be reversed to establish Chinese monetary hegemony. And the most brilliant aspect of their strategy? By the time Americans recognize what's happening, the silver will be gone. The infrastructure will be built, and the alternatives will be operational. The monetary war isn't coming. It's already here. The question is whether you'll position yourself as a beneficiary of the transition or a casualty of the collapse. China spent 5 years accumulating silver while America printed dollars. Now they're about to demonstrate which strategy creates lasting value and which creates lasting problems. The October data was the warning. The yuan announcement will be the attack. And the dollar's response will determine whether America manages a controlled decline or experiences a chaotic collapse. History suggests that hegemons rarely choose controlled decline when chaotic collapse remains possible, which means the silver war is about to become far more intense than most Americans can imagine. The weapon has been built, the target has been chosen, the only question is timing, and China controls the timing completely.